Bitcoin just hit $59,000. 2 weeks ago, it was at $77,000. That's an $18,000 drop in 14 days. Over $1 billion in liquidations in a single 24-hour window. The crypto market cap is down 48% from its peak. So the question every trader is asking right now is the same one. Is this another bloodbath? Or is this the flush before the recovery? Here's what actually happened, what the data says, and what levels you need to watch right now. 3 things hit at once, and understanding each one separately matters. First, MicroStrategy. The company now known as Strategy has been the most aggressive corporate Bitcoin buyer in history. Since 2020, their rule was simple: buy only, never sell. That rule just broke. They sold 32 Bitcoin, that's it. $2.5 million worth. Less than 0.004% of their $60 billion Bitcoin treasury. But here's what that signal did to the market. The entire institutional Bitcoin trade was built on a narrative that the biggest corporate holders would never sell. The moment that narrative cracked, panic followed. Not because of the size of the sale, because of what it meant. Second, ETF outflows. For 10 consecutive trading days, spot Bitcoin ETFs have seen net outflows, over $3 billion total. Over 40,000 Bitcoin pulled out by institutional investors. This isn't retail panic. This is professional money making a decision. Third, Mt. Gox. The long-dormant Mt. Gox estate moved 10,422 Bitcoin, worth roughly $739 million, in a single transaction. Every time Mt. Gox moves coins, the market reads it as potential selling. That fear trade hit on top of everything else. 3 events. 1 week. Over $1 billion in forced liquidations as stop losses triggered across the entire leverage stack. This isn't just a crypto story. Bitcoin's correlation with the Dow Jones is sitting at 84% right now. When macro sells off, Bitcoin sells off with it. Here's what macro is doing right now. Inflation is still running at 3.8%. The May CPI drops June 10th, 4 days from now. If it comes in hot, rate hike expectations accelerate and risk assets get hit again. Bitcoin is a risk asset. The dollar has been strengthening. A stronger dollar historically pressures Bitcoin because global demand for dollar-denominated assets increases and speculative assets get rotated out. Institutions are moving defensively. The same macro environment that's pushing fund managers into shorter duration and cash is also pushing them out of crypto. AI stocks and semiconductors are getting the rotation money. Bitcoin is getting the outflows. The macro headwind is real. And with CPI dropping in 4 days, this isn't a moment where macro clears quickly. Right now, Bitcoin is at $59,000. Here's the technical picture. $58,000 is the first critical support level. This is where a cluster of long-term holders bought in during the 2025 run. If 58K breaks cleanly, the next meaningful support is at $55,000. And below that, $50,000 becomes the conversation. On the upside, $63,000 was the level Bitcoin broke down from in early June. That's now resistance. A recovery above 63K with volume would be the first technical signal that the selling pressure has exhausted itself. The thing to watch is ETF flow data. When those 10 consecutive days of outflows stop, when you see even 1 day of net inflows, that's the canary. That's institutional money coming back to the table. Until that flips, the path of least resistance is lower. Scenario 1, this is a shakeout. The MicroStrategy sale was 32 coins. The ETF outflows slow down. CPI on June 10th comes in softer than expected. Macro pressure eases. Bitcoin finds support at 58K, bounces, and the next leg higher builds from a cleaner base. This is the bull case. Scenario 2. This is a structural break. The institutional narrative around Bitcoin cracks further. ETF outflows continue into week 3. CPI comes in hot on June 10th, and risk assets get hit again. 58K breaks. 55K becomes the test. The bloodbath call was right. Which one is it? Right now, the data favors caution. You've got institutional selling, negative ETF flows, macro headwinds, and a major psychological narrative break. That's not the setup for a V-shaped recovery. Watch 58K, watch the ETF flow data daily, and watch what happens to risk assets on June 10th when CPI drops. Bitcoin at $59,000, $18,000 lower than 2 weeks ago. $1 billion in liquidations. The biggest corporate holder breaking its own rule. Is it a bloodbath? The data says it could get worse before it gets better. Is it an opportunity? For patient traders watching the right levels, it could be. $58,000 is the number. ETF flows are the leading indicator. June 10th, CPI is the macro wildcard. If you want this kind of breakdown every week, the real drivers, not the headlines, subscribe. New analysis every week, no fluff, just the levels and the logic that matter. Educational content only, not investment advice. Trading involves risk. Do your own research before making any decisions. See you in the next one.